All right. All right. So let's get started. So what we're going to be discussing today is we're really going to talk about what I see going on in the market coming this week or even further moving forward. So I really want to focus in on the indexes, SPY, QQQ, IWM, because at the end of the day, um, you will find that, well, you have to look for confluences as well, but this is just really a forecast and look at what's really going on in SPY, QQ, and IWM. And if those are bullish, well, you expect the rest of the market, the stocks, to be bullish. And if you look at the individual tickers, the major tickers such as Tesla, Amazon, Nvidia, Microsoft, all the big names that moves the market, if those looks bullish, then there are confluences within the market. So you must look for confluences. And what I mean by confluences, I talk about this before, is if SPY or QQQ looks very bullish, the setup is very bullish, then you expect the major holdings in the market. Like if you go to a SPY, let me see if I could pull this up really fast. Maybe this might be helpful for you guys. All right, let's look at SPY for a moment, so that I really drill this down so you understand. I think that's the wrong one. Is it? Yeah. So this is something I learned from the past as well. When you're looking at SPY and you look at the holdings, right? These are the major holdings in SPY. You want to look for these tickers as well to see if they're confluences. So when you're looking at Apple, Microsoft, Nvidia, Amazon, Meta, Berkshire Hathaway, Google, let me see what else. Google, Tesla is not in here, but you want to look at Tesla because these are the uh, big indices or big tickers that move the market. So if you're looking at these tickers and they also have a bullish setup going forward, then you expect the market to move with confluences because they're positive correlations. So that is what you want to look at. The mistake I see a lot of people make whenever they're analyzing an individual ticker, and you don't want to do this. Amateurs do this and they make mistakes. They'll look at an individual ticker, such as let's just look at maybe Apple, for example. They're looking at Apple, and Apple has a bearish setup in their view, because sometimes it could be subjective when you're looking at technical analysis, and Apple has a bearish setup. But now you go and you look at QQQ and Nvidia. Let's look at QQQ here as well for a moment. And then you're looking at QQQ, and these are the major holdings. See, Tesla's here. You want to look at these major holdings, especially the ones that have an overlap within SPY and QQQ, because they're SPY and QQQ may hold the same ticker in both of these indices. And if Apple has a sort of bearish setup, not completely bearish, but then you're looking at the overall market. The overall market has a very bullish setup. You saw all these other tickers has a bullish setup. Now, if you're looking to go full port, shorting Apple, I'm giving an example. This is not what's happening in the market right now. Then you need to be very cautious in that case, because you're like, okay, there are lots of bullish setup. The entire market seemed bullish. If that's the case, then a rising tide might float all boats, or something. It goes something along the line, or raise all boats. I don't know, float all boats, whatever cases. You get the idea. I'm not a sailor, so I don't know, but that's the idea behind looking at confluences. You want to make sure that everything might be moving in the same direction. So now that we've got that out of the way, and not helping you guys not to analyze markets or tickers like amateurs, don't do it. If you're going to do it as professionals, you need to look at confluences in the market, because that's going to give you an edge in the market when you're analyzing stocks. You want to get into a habit of always look at SPY and QQQ when you're looking at individual tickers, because you want to see what kind of setup the market itself has. Because if the market is going to move one direction, it's very likely it's going to pull the rest of the tickers in the same direction. All right. So let's look at. So we're gonna look at some data in a few. Let me go ahead and look at some of the whales targets for SPY going forward for this week. So these data could change tomorrow. So far you have here SPY, and these data could change tomorrow. We have a lower target for SPY on 520, and whales like to revisit their targets at some point. Maybe they'll change it as we go along. I'm going to look at the option flow dark pool data because these targets are comprised of dark pool data, and they're comprised of like option flow and dark pool data right now. And you have an algorithm, an AI that decide what are these targets. So it looks at all of that, and pretty nice. It comprises the data, so you don't have to go ahead and do it yourself. So we have a lower target on SPY for 520 going into this week. Well, going into this week, but it doesn't mean that it'll just stay there because tomorrow data could update and this data could change as well. But at least we're using this as the most updated data that we have so far. We have whales support at 550, and we have a whales target at 560. Looking at this right now, and you're looking at the solid line. Whenever there's a solid line versus a dashed line, it means the solid line has more validity or more strength to it compared to the dashed lines. It means it's still valid, but there's more strength to it, which means at some point whales will want to revisit this 520 target that you have here. And now they may move their target at some point during the week or next week. Every day we'll look at the targets and we'll see whether or not they're going to move the targets. But these targets are very, very helpful when you're trading because these are things you don't see on a naked chart. These are data. And if when many times, 80% of the times I look at the data, whales will hit their target. It's just timing of when they're going to hit it. That's the difficult part, but they'll hit it. You just have to position yourself. A lot of times it's the timing. Position yourself at the right time for when they're ready to hit those targets. Now, we're at 550 right now for SPY. And you have whale support at 550. So whales set support at 550, which means going into this week, you're expecting whales to probably hit this 560 target because they set a 560 target there. So I'm expecting whales to hit that target 560 once tomorrow comes. In the morning, I'll see what the data looks like and whether or not they'll do it. Now, that's how you read whales target. When I put whales target on my charts, I am talking about these targets that derive from dark pool data and option flow data. It comprise everything, and it puts a target there. So I'll update it. And whales target means whales are expecting to move the stock in that direction to hit those target. The support means whales are temporarily setting support there, so they may want to bring the stock back at that price and move it back again. So when you have a support and if the stock is moving down, pay attention to how price is reacting to whale support. If it's breaking below it and is rejecting, or is finding support at whale's target. Now, that's for SPY. Let's go ahead. Before we jump into SPY, I want to look at VIX. Let me go to my Discord. This here is something, and I posted it since here. So the last time I posted this, I said there are two directions VIX could take. We either get a rejection that comes here and fill this gap and maybe have a little bit of bounce, or we're going to have some upside and then have that fall on top here. So you might see a temporarily bounce in the overall market if VIX does this, temporarily dip in the overall market, and then we'll just move up, or you'll find VIX come down. I'm not a magician. I don't know what the market is going to entirely. As a technical analyst, you have to look at bearish and bullish case scenario. Anybody who tells you that they know entirely what the market is going to do is full of BS. Nobody knows. They would have probably been a billionaire trading the market. So this is what I had for SPY. For VIX, I had this scenario. And then at this line right here, which is about that 33 area, that was the make it or break it. I want to see whether or not VIX could have got above that level, and if it could not and reject that level, I expected VIX to fulfill this. So you're looking at levels to see what does price do at a certain level. And if the price moves above that level and finds support, you're expecting one part of your bias to take effect, which is the bullish. And if it does not break this level and it falls below this level, you get rejected off of this level, then you expect the price to move in a certain direction, a bearish direction in this case. So you're using levels. When I have levels, you're looking at what price is doing at that level and what is volume doing at that level is important. We're going to get into volume price analysis at some point. That's what I had for VIX on when was this? This was April 17th. I did not know the direction, but I thought we would at least fill this gap over here. We came right into the gap, got rejected a double top, and then we moved down. That was my hint, like, okay, the next time I posted it, I'm like, all right, now I know what VIX is going to do. And that's when I gave you the target of this is what VIX is going to do. And if you knew what VIX is going to do here, then the overall market would have been bullish because they have a what you call a negative correlation or inverse relationship. And what that means, whatever VIX does, the market's going to do the opposite. So once I saw that rejection, I knew exactly which one of these Elliott waves are playing out, and the one's going to play out is the one to the downside, fulfilling this gap. So I continue to post on VIX, and I saw this here in like a bear flag, or what you call a base that was being formed. And we're at wave 3, and within this base, you had a 1, 2, 3, 4, 5. I saw the 5 was formed. I'm like, all right, we're breaking to the downside to fulfill the 5th wave. Where do I get the 5th wave from? You had a 5th wave. Well, you had this 5th wave up here, which was the macro primary wave that we're in. Then you had an A, B, C, D, and E. Some people like to use a 1, 2, 3, 4, 5. I don't want to use a 1, 2, 3, 4, 5 because you already have a 1, 2, 3, 4, 5 here. So if I'm using numbers on one end, I want to do letters on the other end to help me understand or help me pinpoint really fast what's going on. Let me just read the chat. Then would it make sense to start with VIX first as it sets? Yes. So whenever I do analysis, I look at VIX first. Yes, Raj, I always look at VIX first because I want to know where VIX is at, because VIX is going to set the mood for the rest of the market. It's correct. That's how, as a professional, that's how you want to look at the market. You want to start with VIX, see where VIX is at, because VIX is going to determine how the market moves most of the times. So now I understand where VIX is at. I can start analyzing the indexes going forward. And before I do not, what I don't do, I don't analyze individual tickers first before I analyze the market. When I start analyzing, do my analysis, I start with VIX. I want to know the volatility of the market, whether or not we're going to have an upside volatility or downside volatility based on where VIX is at. Once I figure that out, I start analyzing SPY, QQQ, and IWM. Once I understand what they're pointing to, and there has to be some correlation with what I mean correlation in this case, and I'm not talking about positive or negative correlation. I'm talking about in terms of confluences. I don't want to use the word confluences either. I want to say there must be a relationship, an inverse relationship between the indexes SPY, QQ, and IWM from what I got from VIX. So now let's just go at this on April 21st. Let's just say I was looking at this, and I expected downside now that I figure out where we're at on VIX. We need to know where we're at on a specific ticker or anything like that. And once I figured that out, I knew we're going to have some downside to most likely filling this gap here, because this here, I saw this was like a bear flag. And after we finished wave 3 within this E wave, we finished D, and now we can have a 1. I saw a 2. I saw a 3. And when I saw this forming, I'm like, okay, this here is the 4th wave, and now we have to have the 5th wave, and we're within a bear flag in a way. So once I saw it, I'm like, all right, so we're going to break down and most likely fill that gap. So now I know where we are on VIX and where we most likely will be heading on VIX. Once I have that down, give me 1 second, guys. Okay, sorry about that. Yeah. Now I know where we are. It's always important when you're analyzing the charts to know where you are. Once you know where you are, you look for bullish case scenarios and bearish case scenarios. Don't be the trader who marry a bias that you have. If you have a very bullish bias, great. You look for things that's bullish, but always look for, okay, how can this go wrong? Or what are some of the other scenarios that are bearish? You want to look for that because that is where your risk management comes into play, where you're managing your risk and you have your levels waiting to say, okay, if this does not go my direction, it looks 70% bullish, but there's a 30% chance this will not go in my direction. So you're always managing your risk if it does not go in your direction. Well, as I said, I saw VIX is coming down here. I'm like, all right, I figure out what the direction is going to be for VIX. Once I figure out what the direction is going to be for VIX, I update you guys. We continue to move in that direction. And I figured, okay, we're going to break down. So you pretty much had that. You want to call this a 1, a 2, and maybe I have a 3 or an ABC to the downside. It doesn't matter which one it is. But this is the last one I had right there that I showed you. We were right at the top here. And I figured we're going to break that down. And here we are. We broke below this level. I was watching this level here on, I think it was Thursday. I was watching this level. We broke this bear flag. We came down and we retest the bear flag. So you want to see retest levels as well when you're trading. Because a lot of times if a stock breaks either a bear case scenario, it breaks a level you had, it may retest that level, and you want to see what it does when it retests that level, and that may be your confirmation of entry. If you're shorting or you're longing a stock, you retest it, and it continued to break down. I had that level there, and I want to see whether or not we have a double bottom or it's going to break it, and it break this level. What I want to see, it may come down here and retest that level again and continue to break to the downside. If anything, and it breaks here and it start move above it, and it finds support here, then you can see some more upside in VIX. And it has an inverse relationship with the rest of the market. Now, the way this is setting up going forward, I strongly believe this here is going to fill the gap at 24.93 to 21.79, because I'm looking at the overall market. The overall market also look bullish. So the overall market looks bullish. VIX looks bearish. So that means everything, the relationship of everything I'm looking at, makes sense to me. That completely makes sense, and that's how it should be. But if VIX looks bearish and the market also looks bearish, there's an anomaly there. It doesn't make sense because there is an inverse relationships. Just like bond prices and interest rate, there's an inverse relationship. The same thing here. Now, that's to help you guys understand how you analyze markets. This is to help you get a picture of when you're going in, you're analyzing markets. Start with VIX. Everybody does it differently. Do it differently, not does. Everybody do it differently, but this is the way I do it. And you could choose to do it in a way that you want to do it. That's up to you. But I like to look at VIX. Then I like to look at SPY, QQ, and IWM to understand the overall market. Rat says divergence then. Clarify a little bit more. I think you're talking about there's probably a divergence from looking at VIX versus the overall market. I'm not sure what you're looking at, but there's a what you call a negative correlation or an inverse relationship. So if VIX is bearish, the overall market should look bullish. So now that's what I have for VIX. Let's look at where VIX is at right now. So here we have VIX very close to filling this gap, and we're looking at the 2-hour chart. Let's look at the 2-hour chart here. We're very, very close to filling this gap, and I think we're gonna fill this gap maybe Monday, maybe tomorrow, or sometime this week. We're very close. That's like what? Let me see. We're about 12%. So I think you're gonna see a fill in this gap here, and the market's gonna move up. Now, the most bearish case scenario for VIX is if VIX begins to fall below this gap here. And what that will look like is, let me find, okay. What that will look like is, give me 1 second. If you see something like this take place, then that is very, very bearish for VIX. And you know what's bearish for VIX is bullish for the rest of the market. So you can see this happen. Or based on the way the market is set up, you can see we fill this gap and retest this level right here. And we maybe continue to move up a little bit as the overall market cools down a bit, because we've been on a run in the overall market. And as VIX is moving down here, you may see the overall market start retesting some levels on top here up to I have 575 level in SPY. And assuming as VIX is moving down here, you might have that 575 level retest on VIX. And now we need a retracement. And as that retracement starts to form to retest some of these level here, that's where you're going to see VIX start moving up again. And at some point, it'll start break down even lower. Now, that's a scenario that I have here for VIX. Very much possible. And why would you break below the daily gap for VIX? Think of it as a fake out in a way. You need to get people to say, okay, wow, VIX broke below this level. Let's go bullish in the entire market. This is very bearish in VIX. And guess what happened? These are all like, think of it as liquidity levels. And you just get a lot of people trapped at the bottom here, and then you just take it up to the upside. So bull trap, yes, that's called a bull trap often. And this is very much possible because you're looking at the overall market where resistance are as well, because you need a retracement at some point. So this here is for VIX. So that's what we're going to look at. I'm just going to, like that. All right, now that we have VIX, this is what I'm looking at for VIX going forward into the week. At least a gap fill on VIX. Now let's look at, we have the overall market here. Let's look at SPY. If you look at SPY on the daily, if you look at SPY on the daily, we came down into this level here. We tested this level right here, which was that 493 to 479 to 493. It's a level I had, which I said, okay, we're most likely going to come down and retest this level. I want to see what's going to happen at this level. Price was very strong. Then you see volume coming in, which is very positive. That's saying, okay, accumulation has started. Bulls are defending that level, which was great. So you had that. You formed this symmetrical triangle right here, and you can see it better on the 2 hours. So let me just go back to the daily for a second. So a level that you'll be watching on this is this level over here, which is that 265 level. If you pull this right across, you'll see that 265 level, 267, 265, towards that 275. We're talking about drawing levels. For you to draw levels, you have to look back at charts. Look back at a historical price of chart. Because obviously, see, this was a major level over here. So that's 265. Put that there. Price got rejected until it broke over it. And it came back, retested, found support, and then move up again. Came back, and then it finally broke, and then we moved down. So that becomes an important level of resistance. 565 on SPY. Now, the other one we're going to look at is this level right here, which you see whales have support of 550. So we're just going to put that right there. 550. So this is an important level, and SPY is right at that level over here. Now, whales have target of 560. So I'm expecting that 560 to get hit up to that 575, where we can start having that retracement on SPY. Let me go to 2 hours. So here we are on the 2 hours on SPY. You have this symmetrical triangle, which I think I had as well. I think I talked about this symmetrical triangle right here on SPY. I posted at some point, I think, in the Discord. Let me see. Give me a second. Yeah, I posted this. So this is where I posted it and stuff. Talked about this symmetrical triangle where I expect us to start moving up here. And this was a tell whether or not we broke above 541 and 544, because we have a range. I draw a range here of 447 and 485. We're within this range. You had this level the whale support level that I have here. You want to see price reclaim this level and start pushing to the upside. And you want to see the break of that 547 if you want to get above that 565, 575, which I think SPY might be heading next. So we had that, posted that, and I give you guys all, when I post this stuff on Friday, I give you guys a lot of information on Friday in terms of gamma exposure, etc. Show you. Anyways, let's look at what's happening next. Fix is bearish. SPY, on the other hand, looks bullish. Now, the levels that is important that I'm looking at is this whale's target of 550, which SPY is right here. You have a pivot zone at 541. For those of you don't know who a pivot zone is, a pivot zone, I see questions in the chat. I'm going to get to them in a minute. A pivot zone is, this here was a resistance level. I've now changed a resistance level into a pivot level, which means I will be looking at this level to see what if price revisit this level, whether or not it holds it or break below it. And if it holds it, it becomes now a support level because it's holding that level. Now I have here a resistance level, and I'm gonna do that. So whenever you see I have different colors, this is a darker red versus a lighter red. The lighter red means, okay, it's a resistance level, but it may not be the strongest resistance level. The deeper red is those are stronger resistance level that I'm looking at. All right. I have 565 where you can see some resistance. So if anything, you might see this whale's target 560 get hit. But right now, I think SPY might be heading towards that 570. So the level I have for SPY right now, before we have a retracement, is somewhere over here. 565 to 575, I have this level. Before SPY have a retracement, where it could, you could see SPY do something like this. Gets to this level, and that's where you see SPY starts to break down and retest maybe this level here, or it'll retest somewhere around that 531 all the way down to that lower target of 520. Don't know entirely what it's going to do before it start moving back up. So you could see SPY do something like this going forward. I was just gonna look at something else. Let's see what Elliott Wave has to say on SPY, because I'm looking at Elliott Waves as well. And the wave count for SPY that we have for Elliott Wave is, let's look at the 4 hours. The 4 hours is at 575. Okay, so we're in agreement. We are in an agreement. That's what I want to see. If I'm looking at the wave count as well on SPY, I want to see that we are in an agreement, because you had you're starting to have a wave 1 here, wave 2, which comes down to that 520 area, 530, 520. That is showing, and my chart is showing, yeah, 530, 520. Yeah, exactly the same thing that I told you guys. Same thing. So I want to see these kind of confluences when I'm looking at the Elliott Wave as well, if I'm doing Elliott Wave. This here is your accumulation, where you could go back and enter, because this is where you really want to enter, and you could buy leverage ETFs if you don't want to hold options. Options are expensive. You want to hold the leverage ETFs on SPY, and we might be swinging those guys, because what I was waiting to see happen in the market, I was waiting to see the market has a direction, and it seems like we're finding a direction in the market right now. And if that's the direction of a bull side, we're gonna start buying the dips. We're in a buying the dips direction right now, because of the direction of the market, that we're buying the dips market, and that's what I want to see. The only thing that's like a curveball is tariffs that's happening. Let me just take a minute to answer any questions. I'm looking at to determine if resistance is a strong or weak level. Are those SPY resistance support levels based on X hours chart drawing the All right, let's look at the first thing I do when I look at levels, strong levels. I look at the daily or the weekly chart. Let's look at the weekly chart really fast. I always do a top-down analysis. What a top-down analysis is you're looking at a macro on a chart. That's your top. Down is you're all the way down to maybe the 30, 15, or 5 minutes on that chart. Hourly, whatever it is that you're, depending on what kind of trader you are. If you're a day trader, I want to look at the 15 minutes. Now, top, you're looking at SPY. And this will obviously be a resistance because, and it's a very strong one. So I'm going to mark this 4 times. And I'm going to put here ATH, means all-time high. And I set a high right here. I set trading view to tell me a range that I'm in when I'm in a window, whichever the screen. I want to know the range, so it'll tell me the high of that range and the low of that range I'm looking at. So trading view will automatically calculate that for me as well. So that is 6, 13, 23. That's the all-time high. I know that's going to be a strong resistance for SPY. Now I want to go back and I have this level here because if you're looking at a daily chart, when we hit this level, you saw a big sell-off. So that's an important resistance level because you saw a big rejection over here as well. Big rejection on the daily, on the weekly chart, and on the daily chart as well. So what's strong is what strong resistance support. What kind of price reaction do we have at that level? Was it a strong selling where you saw the price really sold off? Then that's a very strong resistance level. Did the price really rip to the upside? And if it did, yes, that's a very strong support or demand level, which I have here. Very strong because you saw the price touch this level and it just ripped to the upside. And you have a very good move to the upside, which is a 14%. So it came back again and it touched that level and we just ripped to the upside again. So that's how you look at support and resistance level. What kind of a reaction did we have at that level? And that's how you determine whether or not it's a strong or a weak level. There's one more question above on gaps. Please scroll up. Okay, give me a second. I'm going to get to the question in a minute. All right. Now, we're looking at what's going on here. I'm going to look back at a 2-hour chart. I think SPY is going to be heading in somewhere within this level. Now, we have the levels. Let's look at the fibs. Why I use fibs? I did the fib retracement. You know, matter of fact, let me delete the fib retracement, and I'm going to do it for you guys live so you understand how I do this. You have the top of wave 5 here. Then you have the A, B, and C retracement to the bottom. That retracement has been completed. Now you're starting to see upside. Where do you tend to see some rejections? Where do you tend to see some rejection when you're analyzing? Once you see the top and you see the bottom, you will take your fib retracement and you start from the top and you draw it all the way down to the bottom. Where you tend to see a retracement level, resistance is right at that 6.618 level to that 786 level. It could start at that 0.5. So you will see it anywhere within this range here is where you will start seeing some sort of rejections happening within this level here. And if you pull it right across, this is your level, your rejection level right here. Now, it just so happened there was some choppiness here before we finally break down. So it makes sense. So you would expect some sort of reaction within this level. And we began to enter that level again. So the golden pocket would be that 0.618, which is $563, is where I expect some sort of rejection. We came up here, and that's when we start having that rejection. So it's possible we may have the same thing happen again. And if you, let's just use this. If we use bars chart, let's assume we did the same thing again. You can see the same kind. I'm just saying, you can see something like this play out again, but you will not have this much drop because you need to know what kind of cycle, which cycle you're in Elliott Wave. And right now we're in a bullish cycle, and this here is our wave 1. And for wave 2 retracement, you expect to have a 0.618 retracement. So you tend to get rejected on the top side at 0.618, and you will tend to find support at the bottom when you're doing retracement at the 0.618. So it's the golden pocket of where you tend to see resistance and support level being formed. Give me 1 second, let me drink some water, guys. So what we're looking for, we might be looking for some kind of move like this at this with this bar chart that I have right over here. I'm just going to remove the fib retracement tool. So assuming we have this kind of move, we're now going to come to the bottom here. That wouldn't make sense because the market direction has changed unless Trump come out and say something else, like he's going to do 200% on the tariff in the whole world, and they're just going to, the whole world is going to do 200% tariff in the United States. It's some crazy stuff, right? We have a symmetrical triangle. We broke out of it. I expect a retest. So we're going to take our fib tool right here, assuming somewhere here is going to be the top. We're going to start at the bottom of this level, where was the last point where we found bottom. And we're going to put it all the way on top here, assuming this will be the top here, assuming somewhere here, that 271 level. And we're going to end our retracement tool right there. Now, you're going to look at levels. So the mistake I see people make using retracement levels, they don't use it with confluences. And what I mean by that, don't use your retracement level first. Look at levels first. And what I want to do, I look at levels where price may have a good chance of reversing. And let me just remove this here. Now I have 531 here, and I also have this whale support that we had before, which is a good level because here it was resistance and it kind of flipped to support, which is 524 to 523. I have a whale's lower target of 520. So what I am looking for is somewhere within this range that I showed you guys. I'm looking for a level somewhere between this 530 area, 531, all the way down to 520. So that's a range of about maybe 2-point-something%. So that's where you can start accumulating maybe your leverage ETFs. But if you're trading options, that's a big drawdown. If you're buying calls, you're probably going to lose a lot of money there. So you got to know, you want to wait. You want to probably accumulate leverage ETFs long at that point. And then once you see that reverse, you could jump into your calls. If you're day trading, you could be buying the dip because we're obviously in a buy the dip mode because now we're in upside and we're wave 3. And the rule is in wave 3, never short a wave 3. You're going to lose money in wave 3 because that's the most impulsive move you're ever going to have in an Elliott wave. Wave 3 tends to move sometimes very fast to the upside. Now we're looking, based on levels, we're looking at somewhere around this area here because we saw this level, retested, rejected, came back up, and now it's acting as some sort of support here, came back, retest. So now that I have that, I also saw a wick down here because I'm assuming a lot of stops were the bottom here. And you saw this big wick, that was a stop loss hunting. So I want to draw a line across that level as a target as well. Like, okay, 509 is a very much possible target. I have this 1 hour fair value gap that was never filled, and it doesn't have to be filled, but it's still there. It's a liquidity zone that I have to pay attention to as well. So I have these level, and you could pull these level all the way down to the bottom here. But because whales have a target here, 520, I most likely want to pay attention to these level between here. And if it breaks these level, then I start looking at lower target, which is that 509 or 503. But now I'm going to use my retracement tool, and I'm going to start from the bottom here, and I'm going to come up somewhere on top here to that 570 mark, somewhere within this level here. And I'm going to look for where that 618 is because institutions will want to start bringing back that down towards a discount area where they can start buying. And that level could be anywhere between 0.5, 526, all the way down to 500. There's no telling of where they're going to stop. Now, what you're looking for is specific levels and volume price analysis. And I'm going to be gauging those in the Discord to see where we're coming back and where we can start probably swinging some leverage ETFs or options on individual tickers and so forth, or when we can start buying the dip and day trading on the rips as we're having them during the day. So you're expecting somewhere between that 0.5 and 0.786, that's 526 to $500, which really coincide with the same targets that I have here. So that 618 level is $515. So I want to start seeing we re-enter these level here. I want to see that happen within this level here. And a wave 2, you will come down to at least that 0.5 level, which is 526. So based on the retracement level, though I have a 531, it's very likely that they will break this level here and come down towards this 509, towards this 526. So that's my key level. So you could have a 531 as well. It depends how high this go. The higher this go, by the way, obviously the wave 2 retracement will be higher. So it depends. So we're assuming it's somewhere within this level. If we drag this up a bit more, you could obviously see the retracement tool. You're going to get a higher level, but we're assuming here. So once we get the top of this level, then we're going to have more accurate forecasting. And that's for SPY. I'm looking at somewhere an upside here towards that 575 for SPY, at least the top, before we start having that retracement over here. Now, let me just remove this. So then you can see that retracement right here. We test the breakout right here at that 520, where we broke out the symmetrical triangle breakout right there. And then you begin to see your upside move. That's what I think very much is possible. All right, that's for SPY, guys. If you have any questions, we're like 42 minutes into the video already, and obviously I could have just analyzed this in 10 minutes and tell you guys, hey, look, it's going to do this. But I am doing it in a more educational manner, because in this Discord, I want you guys to learn how I analyze charts, the things I look for. You look for key levels where you see a lot of sell-off or a lot of support, and you draw your tools. You use your tools, and you draw your resistance or your support level. Now, I found those right here, and I found them at the bottom here. So the level that we're looking at, or the range we're looking at, is over here. Let me use this. That's the top range we're looking at, and the bottom range I'm looking at is over here. That's my range that I am looking at right now. Top of the range, bottom of the range. Want to see what price does within that range. So I have my levels. I draw my fib retracement tool, start from the top. When a price has fallen from top to the bottom, and you want to see where rejection is going to happen in the top side, you want to use the retracement tool, and you start from the top, you draw it to the bottom, and to see as price is moving, where will price reject. Now, as I am looking at this as well, the one thing that I want to see is whether or not we're going to be forming some kind of pattern within this pattern. That could be maybe a rising wedge or something. I want to see what kind of pattern are we forming within this level, because it's important to know whether or not we're forming some kind of pattern like this. See what I'm saying? We could be forming some kind of pattern like this. Then we began to form a double top, and then that's when we actually break the downside like that. So I want to be able to gauge these things, but your levels are the most important thing you're looking at, right? these is like using tools to start forecasting. You're looking to see where what kind of pattern is forming, and you're trying to forecast. So this is pretty much how I look at charts. I visualize them in my head to see what am I seeing, and then I start using the tools to start draw things out. So there you have it. That's for SPY. So let me see here. Okay. Again, this is what I expect to happen. Was that helpful to you guys? I mean, that's me analyzing SPY. I know I'm supposed to do a forecast for the rest of the market, but we're in 45 minutes into this, and I want to make this session a educational session because I have to go analyze the rest of the chart as well. But this is analyzing SPY. Don't expect SPY to come all the way to the bottom here, as I said, but somewhere within this range and this retest level, and then move to the upside. So I want us to trade this level here on a daily base. We're going to be in a buy the dip moment, and we're going to be in a buy the dip moment. And once you see this kind of pattern start forming, we're rejecting. Expect the pullback to start. Okay, expect that pullback to start. Let me see. Question. Let me see. I think Rad said he has a question on top. If I could find it.
Hey, Avi, I looked at the numbers and I think I've answered my own question. I'm good on it. The question was essentially, are you looking at just the regular trading hour gaps or all the Globex session and everything? And it looks like everything.
I look at everything. It makes more sense to look at everything for me because you're in IT, right? I'm assuming. I'm just saying.
Yes.
Yeah. So I come from a data analyst background as well. So the more data you have, the better informed decision you can make. So everything matters that I look at because every gaps, those are liquidity pools. And if you study ICT as well, a lot of times they'll come back and retest those gaps. Those are internal liquidities. So that's SPY. Let me see here. I have a question at the bottom. How do you determine whale's targets? Yeah, so whale's target, I personally do not determine the whale's target. I use a software called Trady Ticks. So this is Trady Ticks. They are a platform, an amazing platform that I use. These are all things that I could do with it. And right now I'm on charts. If you click on charts on their dashboard, I could see what the 0 DTE flow is. And obviously there's no information right now, but I could look at during the day. If we open Monday morning, it tells me the 0 DTE flow, what's going on here. And it tells me like this will give you a net flow of what's going on in the market, how it's flowing. Or you could go to the market net flow one day and it'll tell you during that day what's the net premium. So it will take the calls and the puts, the premium that's being spent on those. And as this is going up, it's telling you there are more buyers than sellers. Had a pretty bullish day on SPY Friday. So this pretty much tell you, hey, we're in a buy the dip because look, the market net flow is $52.57 million, which means there has been more premium spent on calls versus buyers. So it's pretty much look at the call premium, look at the put premium, and just subtract the difference, and it gives you the net, like you're doing a net income. And this continues to move up, and this is what you want to see. If you're seeing price move up, but net premium is moving down, that's a bearish divergence. Something is going on, and you might see a price reverse at some point. So that's how you use that data. Now, whale's target, these are the indicators that I look at, depending on what I want. If I want customer sentiment, I can see how customer feels about this. Green means customer feels pretty good, price is moving up. Red means customer is getting a bit nervous, so you may see a pullback here. Green means customer is getting better, you may see a rise. Customer is not feeling too good, the sentiment is bearish, so you see a little bit of pullback. Now here, as we're pulling back, we get to the bottom here, customer's feeling okay, but we were forming a bear flag and we broke to the downside. Customer got nervous. They're feeling better here again. They're like, they're still trying to figure things out. You get some customers that's nervous, customers that's feeling better. So we're still in that, okay, we're trying to figure out. Maybe customers, they're like, all right, have we found bottom or not? So it gives you a sentiment of the customer. It will not be the most accurate, but it helps you to gauge how customers is buying and selling this. How are they feeling? Who's buying and who's selling? Now let's do the whale's target right here. Okay, now I click on the whale's target and it automatically will give me the whale's target. Whale's lower target, meaning, okay, whales have a lower target on SPY that they might be looking to revisit at some point because they have set their target there. And what they use to set the target is the AI, the technology behind this platform will use dark pool levels and will use option flow and other data to determine how whales are positioning themselves. So right now, whales have positioned themselves in SPY to say, okay, we're going to set a downside target, a lower target of 520, because we want to revisit that level for SPY. There's probably a lot of liquidity within that level, so we want to take SPY back to that level. They have set an upside target, the whale's target at 560. So now they're saying, okay, let's take SPY to 560. We see some resistance here, And they're like, all right, let's take SPY. There's probably some liquidity at the top there. Let's tap that liquidity to see if some calls, some bullish people or investors or traders want to jump in. And we'll just dump our shares at the top here. And as you see, we have that 576 that I talked about. Here it was support. We run it straight across. It flipped to resistance. So this is a very key level that you want to look at where there's it was support, then a resistance. So you want to draw that line straight across here, which I have. As you guys can see, I have it over here, that 575 level. It's right over here. So that's what I'm expecting, anywhere between 560 to 575 for SPY to retest before we have a pullback to the downside. So that's where I think you'll see a lot of selling happen to get those liquidity on top there as amateurs start jumping in and saying, okay, we're having a breakout, guys. Let's just start longing this. And that's what institutions like to see happen because they need to sell to willing buyers. And they're just going to jump in and sell to those willing buyers and take this back down to their whale's target that they have been positioning themselves for. And that's what I think may happen. Obviously, nobody knows exactly what the market is going to do, but it's good to just have an idea of gauging the market and have your levels and see how price react to those levels. And if your bias is that this is going to happen and it's not doing it, then fine, just reposition yourself to take advantage of the trade that's happening. Look at what's happening in front of you and not marry your bias, because I could be wrong and price could definitely push all the way to that 620 right away. I don't think it's going to happen, but I'm just saying. So the whale's target is calculated using this, and that's why I post the whale's target every day, so you guys don't have to go pay for this software. Now, the one thing I haven't done yet with this software, I could and after I talk to a lot of people in the Discord, I could have like the Discord bots deliver all these data into the Discord. A lot of data you could have delivered into the Discord. I could have. And now I didn't do that. I didn't want to do that because I don't want to flood the Discord with all this information. You guys are going to spend so much time looking at information and you can't trade. And you're going to be like this frozen bunch of people who's just like frozen trying to figure out what this data is. And you don't know what to do with the data. A data is useless unless you know how to use that data to make informed decision. And I post data and I tell you what the data is for to help you to make informed decision. Because you could look at all these things here and you're like, what do I use them for? It's just data dump. And that's why I haven't done that. Because like I have the Discord deliver a bunch of information, but then I just have a Discord that's posting a bunch of data and I'm confusing everybody. And I don't want to do that. So have dark pool levels for SPY here. And this is information, the most current information. that they have, or the latest information. The most current information we'll have is as the market open Monday, we'll have updated information on all these. It'll update. But right now, 551, we have a big print on 551 here for SPY. These are all dark pool prints that came in. It's just gonna put it. I'm gonna put it up on the chart here. But what I like to look at is that 526 huge dark pool. Now let me show you guys something. Let me go back to the Discord. Let's try to move back a little bit. 538. So we had a 538 print here, right? We hit that 538 print, as you see. SPY hit that 538 print. So whales were already start positioning themselves with the dark pool to hit those upper targets, that 538. Let's go back and look at more farther information that I had. Let me see if I have it here. If I put dark pool data, I want to show you how important it is. There you go, 562. So this was posted on April 10th, guys. When was that? That's like April 10th was, how many weeks ago was that? That was like 2 weeks ago? Yeah, that was 2 weeks ago. So this was posted on April 10th, where we have, and SPY was trading at 545. So they've already been doing that. Let me see if I could go back further. 560, there you have it. I want to show you how you use dark pool data. Let me see if I post more of it. So I didn't post more of it, but what's been happening is that you saw that 560, 562, those big dark pool data that I showed you guys. As the price was dropping, something was happening at this level. And what that is telling you, pay attention to that level, because it's very likely that the whales or the institutions will move the price to revisit that level. So now they've set the level of 560, 562. We 538 recently. We saw it revisit 538. Now they're currently moving the price to revisit that 560, 562. And now they began to reposition themselves. You saw a big level here at 526. That tells me as they are above here, it's very likely the price is going to be pulled back down towards that 526.61. And if you look at my chart, I didn't know that this is the first time I'm looking at this data here, by the way. I didn't see that data yet. And where do I have target? I want you guys to pay attention to that. This is without using the data. It's just pure using the TA. 526.31 to 509.69. So I did not look at the data. I'm using pure technical analysis here, but now I'm looking at the data and I'm seeing confluences. So I want to see confluences. So I'm thinking there's going to be a retracement at 526 level. So you pay attention to that level very much, whether or not there are changes within that level, because institutions began to reposition themselves already at that level. That's how you use that level or use those data. Then you have the option flow data that I look at. I look at this during the day on the daily to see what's going on, whether or not we're bullish or we're bearish. We're very much bullish Friday, as you can see. I look at the overall aggregate of open interest, very bullish. The biggest pull right now on calls is that $300 call no, that's Tesla. I'm sorry, guys. I'm looking at Tesla. But if you look at Tesla, that $300 call, when Tesla was like that 2 something, institutions has already began, and I think I pointed that out. They were already positioning themselves. Let's find Tesla. I think I was posting those way back. 416 aggregate. 260. There was already been a position themselves an open interest for 265. We hit that 265. 265, they hit it. So they've already been positioning themselves to hit those. Institutions always know what's going to happen. So you want to pay attention to what they're doing. Here you go. So I posted the aggregate data on April 11th, which was a couple weeks ago, Tesla was trading at 247, and I posted this where I said, look at once you, I always talk about that 250 level. If you guys heard me, I said once you get above that 250 level, expect big pull to the upside, because this here is where calls start coming in. That 250 where you see like, okay, there are more calls over here compared to puts. And once you get above that 250 level, which is a level I had a SPY, whoever's been paying attention to my TA, you would have probably recognized it. And because it's a level I have on my chart as well. It's a level I have on my chart as well. That 250, 254 and I have as a pivot level, you guys can see. And I said, once we get above that level, you're going to see a big push to the upside. And that happens because whales have been positioning themselves. And you saw it right here on the aggregate open interest data, which I have. Big pull to the upside on the open interest. See that? Once you get above that 250, 250 was that make it or break it. If you break that, if you cannot get above that 250, you have pulled to the downside on the open interest all the way down to the $200 level, which is the biggest spike on puts. Once you get to that 250, you get over this, that 250. Now look at the call volume. And the biggest one was at $300. So you saw like all calls stepping in all the way up here to 400, 500, $900. So these are probably leaps that you're looking at, because this is aggregate. It doesn't tell you the date. These are like leaps. Unless I go click on the date itself, then you'll know. So if we look at 4/25, which is Friday, we got above that 250 right here. And once you get above that 250, look at the call volume. So it's been pushing to the upside. So these are the data we want to look at as well, what's happening in that day. And we have the biggest spike at 300. So it's very much possible for Tesla. The level that I have for Tesla moving forward is, where is it? Is that 290, 291, where you could see some sort of rejection, but whales have that $300 target. So I expect Tesla to hit that $300 level up to that 325 level right over here. See, I draw that line right here. That's where you came down. You went to 367 and you came back and you broke below this level. So because you broke below this level, I expect some sort of reaction within this level if we could get above this 290, because we got tested here, rejected, tested here, rejected, rejected, and we continue to break down. And now we're heading back to that 290, 291. So I'll be focusing on that level right there. So anywhere within this range, I'll be focusing on that level right there. That's a major level for Tesla that you want to focus on. So that's your Tesla level right here, guys. Anywhere between 290 to 322. I think you're gonna hit that $300 level. You may get something like this for Tesla. Some sort of move up within this level here. Maybe come back down, retest anywhere here or so, or somewhere at this level, and continue to hit that level and move up before you start coming back down towards that level. So you can see something like that for Tesla. Let's see what Elliott Wave says for Tesla, what the wave counts are for Tesla. Let's look at the 4 hours. Okay, somewhere around that 340 area you're having. So you see that 320. Okay, so that's what you're looking at, a rejection at that 320 level and then move up back towards that 340. So what I'm looking for is same thing right here. Elliott Wave saying between that 320 level, you're looking for Tesla to come up within this level and get rejected and probably come down back towards that 385, maybe. Level I have at a retest is that 3 75 to 360 level that I have here. You may probably retest that breakout. So yeah, I'm gonna do more analysis later, but that's it pretty much. You guys have any questions before I go? Because I have to go analyze the charts. I'm probably gonna finish this like maybe 2 in the morning when I'm done. I wish this was it, and I'll be happy to go spend some time with my kids now, man. Rajesh says, okay, Opta, can you explain what the blue and red waves mean in Elliott Wave? Yeah, I think that was a question you had, Optin. FFX. FFX, are you part of my Discord? I'm not sure. Because sometimes like you have the Discord names are very different from the names you're using here, so I don't know. Like, I'm not entirely sure. Oh, not yet. Okay, not a problem, man. Hopefully that you're seeing value in what I'm doing here. That if you want to be part of Discord, look, I'll be more than happy to help you out. Just know I put that up already. Let me see here if I could find it. Here it is. So effective on May 1st, my Discord is going private, meaning you can't join after May 1st. I'm going to put it private unless I open it back again to the public. You can't get in. And I'm ending the 14-day trial. And so there's no 14-day trial. So you got to wait until I open it back up, or unless you message me and I said, okay. That's the only way. And the reason I'm doing that, because I like the small group of people that I have, and I really want to pay attention and give as much attention to all the Discord member. Initially, when I started this, I want to take on about 25 people at a time that I could really focus and help them. I want to limit access to 25 people at a time within the Discord so that I could have one-on-one session with everybody. I could really talk to people, have an interpersonal relationship with all the team members in here. I don't want to have, and you tend to see this a lot in Discord, you have quite a lot of people, and a lot of like profits are being posted on FinTwit or Twitter X, whatever they call it, social media. And you have to look, I've made this much, I've made that much. And those are probably 10 to 20% of people that's actually making some money. You have like 80% of people that's losing money or they're not making any money. But you'll never find a Discord post a lot of times. Like we have 80% members that don't make money, or they're just there and they're losing money. And I don't want to have that. I want to have everybody in Discord actually making money, or at least 50 to 80% of people making money, or they're learning. And I want to be able to spend time teaching everybody and trade with you guys in the morning. And that's why I want to keep this group of 25 people at a time. So I will open the Discord again once I see, okay, maybe I'll take in another 5 members or another 10 members, and I'll close it again. So that's what I want to do. I spoke to members and I got some feedback, and they like the experience and relationship that I have with everybody, where we could actually talk and ask questions like we're having here. And there's not a lot of people where I can't spend time. So I don't want to, at some point, obviously I want to grow, but I want to do it the right way with you guys. So I look forward to having you when you're ready. If anything and you're not able to join, reach out to me. But if you want your 2 weeks free trial, it's gonna have to be before May 1st, right? You could have your 2 weeks. If you decide to stay, I'll love to have you, man. All right. Let me see. We had a question. Finish that one. Let me see the next question. So let me just put the link in here for FX if he wants to join. I just paste the link in there if you want to, whenever you're ready. If you want to do it before May, what is that, May 30th? No, by May 1st. Okay. Let's see. The next question is an FX. FFX. I said FX. FFX. Thank you so much for being on a call. I really appreciate it. Appreciate it, man. Let me see the next question. I want to make sure I get all the questions before we go, because once I'm done here, I'm probably gonna go have some dinner and start analyzing charts, probably until 2 in the morning. Yes, that you think you're approaching looking. That was Raj. Let me see. Also gaps and levels first and then getting into retracement. There is a method to the madness. Yes, there's a method to the madness. And let's see the other question. Do we have? Says, okay, Upton, can you explain what the blue and red Elliott wave mean on the chart? Okay, so let's go to Elliott wave. So a lot of times I have Elliott wave count. I do have it here that I do my personal Elliott wave count, and I want to find confluence and stuff that's happening. But we have our partner over Elliott wave analysis as well, expert analysis. So I want to use them as well, where I could find confluence. Is when I'm giving you guys targets, they're very high probability targets. So I'm not doing this myself. I don't want it to be subjective, but very objective. So let's look at the where did I go again? Opt-in question. Anyways, yeah. Let's look at the 4 hours maybe, or the daily. Are we looking at SPY? Let's look at SPY. SPY weekly. Okay, here it is. Okay, you have the blue, right? You're talking about the blue and red. Let me go back. Okay, yeah. So the question was, what's the difference between the blue and the red? Now, if you're looking at the blue is the more macro cycle. That is, you see I have one here for that blue. Damn, I don't have, I can't turn out where you can see, but if you look at my mouse, you have that one here. So that one is telling you that's an entire macro wave count that we're looking at. So that blue start, you see the A and the B and the C, that wave one started from the bottom here. The bottom at the end of that cycle is started a new cycle. So the new cycle, the blue is, that's an entire wave one new cycle. And within wave one, the red is, think of the blue as the primary cycle wave, the red as the intermediate cycle within the wave one. You'll have wave one here, wave two, wave three, wave four, and wave five. That completes the primary wave one, the intermediate. And within the intermediate waves, the 1, 2, 3, 4, 5, you'll have the black one here, the smaller ones, that shows, okay, within wave 2 to wave 3, there were 5 counts as well. So when you're looking at Elliott wave, I think I have it. Give me a second. I have it. I went over this as well in my webinar. I went over this. Give me a second, guys. Wait. Let me pull this over here. I had this in my webinar. When I did the webinar, when I talked about Elliott wave, you have wave 1, 2, 3, 4, 5, and within each wave, you have smaller counts. And this is what I was referring to. So you have your 1. Think of this as the blue one. And within that, you have your smaller 1, 2, 3, because every count has a count within a sub count. And you're looking at a sub count. So the blue would be one of the count here. Then you have your sub count. That's really what it is. Each wave has sub counts. So the blue is the more macro cycle of that count. And the red is the cycle, the counts within the intermediate count within the blue. And the black is the count within the red count. So it's counts within counts. So how do you trade these and why they have them? Is because depending on the kind of trader you are, if you're a long-term investor, you're mostly concerned with the blue, because you don't care for all of these pullbacks. You're mostly concerned with the blue. You want to see where the blue is heading, because you're looking at a 1 year time frame that you're trading, or 6 months, and you're now looking at everyday. Day traders want to pay attention to the red and the black, how the market is moving, or swing traders. That's what you're looking at. So then you go down to, let's just say, the hourly. And within the hourly, The blue again, the blue count is the main count within the blue count again. So these are the main count, and then you have the red, which is the intermediate count within the count. And then you have the black, which is the smaller count within the red count. So it's blue, then red, which is within the blue, and the black is within the red. I'm not sure if that makes sense to you, but it's count within counts. And depends the kind of trader you are, that's how you use them. So if you're like trading this on a daily basis, a day trader, you're looking at, okay, we're in wave 2. Here's wave 3. I want to see how this moves. Maybe I can sell on top of wave 1, get back in at the bottom of wave 2, or maybe I'll just swing this for this entire move and I'll just swing shares because this will destroy my entire premium. Maybe if I'm doing options. Did that sort of answer your question, Optin? I'm not sure. Yeah, I hope that was helpful. I hope that was worth $149 for the month. I don't know, but we'll go through this more as we get into more advanced studies. We're gonna get into more advanced studies, guys. Looking at Elliott Wave when we start doing the Elliott Wave principles, Elliott Wave, and using Fibonacci retracements and so forth. We will look at all of this. I don't want to jump you guys ahead and then you get completely lost. Don't want to do that because it's not going to do you any good if you don't have a good foundation. But yeah.
I have a question. Can you hear me?
Who's that?
Mike.
Mike, you have a question? Okay, sure.
Yeah. Thank you. Just quick. So why now we have those they go like no in the wave there in the
Let me put it back
you
up.
see like yeah that's the question. It's regarding. So we have 1, 2, 3, 4, 5 at the end. You see like when we started at 1, 2,
Here?
3, 4, 5, right? So that's still
give me
blue.
the color. Give me the color.
The blue, blue. We have I and then those two. So that's the smaller into the big blue because I see only a 2 on the bottom there. That's just 2. We did not make a big 3, right? All the way in 07. If you go back there.
So we finished
The
2.
left.
This is the big 2.
Yeah.
We're
Yeah,
currently
the big 2.
in big 3. Currently in big
Where's,
3.
but okay, so
blue
2
big 3.
and this all of this until now is big 3.
Yes. Let me show you. Look at the daily, weekly. See right here, we completed wave 2, the big wave 2. Now we're in that big impulsive wave 3. So the red is intermediate. So we have to complete the intermediate, the first wave, then wave 2, then wave 3, wave 4, wave 5, all in red, until we complete the big wave 3 in the blue.
So right now we have red 1, 2, and how many things will be in red? 3, 5 again.
Each have to be 5. Every wave or sub wave, there are 5 waves.
Okay, 1. Okay, so we still have double completed wave 3. Wow.
Yeah. So what you want to do? This is a big impulsive move. You're looking for Tesla. So what you want to do now? We found wave 1 right here.
I would love to see Tesla. This is SPY, but this is.
Oh, I'm sorry. Oh, damn. What am I looking at?
I would love to see Tesla.
Let's look at. Well, SPY is pretty bullish too. Look at the weekly on Tesla. Right now we have completed Tesla. Instead of a 1, 2, 3, 4, 5, we did an A, a B, and a C. Could happen as well. So now once we completed that, A, B, and C, you had a 1, 2, 3, 4, 5. I was expecting a move to the downside because of this very short 5th wave, and there was also a daily gap on Tesla. But right now, I don't think that's going to happen. It looks more bullish. And I think it's breaking this level here. But anyways, the wave count is showing we have ended. That's C. Right there, that's the retracement. The macro retracement, the blue. See here, 3, 4, 5. We completed a 5th wave to the upside. We did an A, B, and C. And here we did an A, we did a B, and a C. That's more very kind of flat. So now we're moving back to the upside. Assuming this holds, we're now in wave 1, 2. We got to do 3, 4, and 5. All red. Now, once that has been completed, right? We'll see whether or not that's the first macro wave, and then we'll have that pull back for the wave 2, and then continue up for the wave 3. So we have to wait
so
and
right
see.
right now we have, sorry to interrupt, but right now we have ABC in blue.
Yeah.
But then after this ABC in blue, we start again with big 1 blue.
Yes.
That's what it's coming.
Yes. Big 1 blue.
Okay.
So we're going back to the big 1 blue. But we have to see, because this red has to play out 5 waves to the upside, and we want to see the top here, the all-time high, is broken for Tesla.
So there is any reason why they started with one? I mean, they started with ABC after that big 5 blue. That's how usually Elliott Wave works. Yeah.
So what's supposed to happen is that you had the ABC and you bottom here, right? This was your bottom. You had a 1, 2, 3, 4, 5, and you also had the A, B, and C. You have an ABC retracement, so that completes the cycle. Tesla coming back down to 101.81. This completes the retracement cycle for this 1, 2, 3, 4, 5 in blue. Yeah, because after you have a 5 upside, right, you have an ABC to the downside, and this was a retracement.
You have an ABC to the downside. Okay.
See the red? You have that ABC to the downside.
Yeah, I'm following.
So and then once
after you have, and after you complete the cycle with ABC downside, you start a new cycle with ABC upside.
You're supposed to start. You're supposed to do a 1, 2, 3, 4, 5 to the upside, but Tesla did not do a 1, 2, 3, 4, 5 to the upside. This here technically was supposed to be 1, 2, 3, 4, and 5.
Yeah.
Right.
So what changed here? Like, why?
The entire market just went bearish. Trump came out with tariffs. And it just continued, broke all the levels. And because it broke all the levels, we just had to do a recount.
How you know where to start the recount, kind of like, because you said we're supposed to have that 1, 2, 3, 4, 5. But then when you start the recount, as a rule, you start always from ABC.
So what made us do the recount, right? Because we had a 1, 2, 3. We're supposed to have a 4th wave that come back somewhere around this $400 level, maybe 414, 415, and then do a wave 5 before we had that bigger retracement. That didn't happen. One of the rule in Elliott Wave is if wave 4 start having more than a 0.382 retracement, right? Let me see if I can find the chart and show you.
Sorry guys for interrupting. I just want to understand.
No, that's fine. No, I got it. That's fine. Now let's just say we had a.
That's pi.
No, that's fine. I'm just gonna use an example. 1, 2, 3, 4, 5. We had that, right? That's the wrong thing. Okay. We're doing a retracement tool. You start from the bottom up to the top of wave 1. You expect wave 2 to have a retracement anywhere between 0.618 to 0.786 retracement. That's where you're expecting a retracement to be when you're having that wave 2 retracement right there. This is your accumulation range again, preparing for wave 3. Right? You got that so far? Good. All right. Let's remove the retracement tool. Once that happened and you're like, all right, we're preparing for an impulsive wave. This is a very impulsive wave, wave 3. You take your trend base here, the fib extension tool that we see, and you start from the bottom of wave 1 to the top, stop there, pull it down to where wave 2 has ended. Where wave 2 has ended, let me move this here, guys, for you. Give me 1 sec. So you could actually see this better. This is an example I'm showing you guys. Now, where wave 3 tends to go, wave 3 tends to go anywhere between the 1 extension to the 618. Anywhere between this. It could be anywhere between. A lot of times, looking at the probabilities, 75% of the times, you will notice wave 3 tends to come maybe halfway point all the way to the 618. Sometimes you could overshoot and just go way up. But most of the times is here. That's why you have profit targets where you begin taking profit at the first extension and you start trimming all the way to the 1618. Yeah? So this is how you will see anywhere within this range is where wave 3 will go. That's the range. So you start setting. So what you do as well, what you're looking at, let's just say the market was having this kind of move. Let's say the market, before that, the market had this kind of move. It's doing this, doing this. And it did this.
Was that accumulate? Okay.
Right? Let's just assume the market had this move. Now, when you're doing this, and let's just say it started a new wave count, right? This is more what it looks like. Let's just say it started a new wave count, and you're like, all right, forget about that. I'm just going to use Elliott Wave. I'm using Fib retracement. What a lot of times people do, they just use the Fib retracement and they don't look at levels what happened before. So if I'm looking at this, I want to look at confluences to know where do I think the price is going to move. Wave 3 is going to move within this level. So I will
hit some selling pressure, right?
Yeah. So I want to take my level right here, because that's a Wyckoff level within this range here. And I'm going to move it straight across. So I'm like, at this point, I think we're just going to do this.
Yeah. Get your profit, go and have a margarita.
So you're going to see some kind of, when you're having this happen here, you want to see bearish divergence forming. Like how you're having the bearish divergence here. You want to see as price is moving up, MACD and RSI is curling down as well to form that bearish divergence, preparing you that there's going to be a reversal. So over here will be where you're going to set your target, not just on the 618 fib, because price will reject at some point within this level here. So now you know that it's going to be somewhere here, but you're like, all right, I'm going to pinpoint it somewhere within this range where I might see a retracement for wave 4. Now, once I know, okay, let's say price rejected at this level, I want to know where else will wave 4 be. I take my retracement tool. Wave 2 retracement is about 618 to 786, sometimes the 0.5 if the move is very strong. It could go to 0.5, but many times the 0.618 retracement. Now, for wave 3 has ended, you want to know where would wave 4 pullback be, and wave 4 pullback tends to be that 0.3. I'll show you right now what. Look. You do the retracement, you start from the bottom, you go to the top of wave 3 to that move. And wave 3 retracement tends to be somewhere around that 0.382. Now, an amateur would be like, all right, I'm just going to put that there. I'm just going to watch a retracement. That's it. I'm going to buy right there. A more experienced trader will move to the left
again
and see, all right, where was the last time I saw price was a resistance and found support?
Yeah, almost that, a little bit sooner. Yeah.
Right? Somewhere here. So I'm going to be like,
make your quadrant again.
Yeah.
For buying and stuff.
So I'm going to be like, all right, so what I want to do, I really want to pay attention to this level all across the board here. I'm going to pay attention to this level as I'm trading, because if we're going to come down, we're going to come somewhere within this 0.382 level over here. So where I will be looking to re-enter, somewhere here. Yeah? So that's my wave 4 pullback.
So that will confirm, let's say you're looking to enter there, but then if it goes below what level, you don't look to enter anymore for outside.
If it's going below the level that I am looking at now,
That level. Okay.
See that level right there?
Yeah. So that will be your.
Yeah, it coincides with the 0.5. So you want to find confluences. You want to see what kind of level is on the chart. Where is that level close to a retracement level on the Fib tools or not? So you're looking at this level here, and you're looking what the retracement tool is telling you, right? The Fibonacci's and the actual level where price found some sort of support. So you want to see price hold this level here and move back up. So it could come all the way here for liquidity and then move back up.
It looks like everything that we're talking tonight and everything that you're saying, it looks like these levels are all kind of set up with AI in their algos.
Yes. A lot of it is algorithmic trading. Yes, that's correct. So this is how, if you really want to trade as a professional, you must know how to chart this way. You must use level and your Fib retracement tools. So now that you've had your, let me go back. Okay, now that you've had your retracement for wave 4, let's just remove this, but I'm gonna. This is just an example of where the next level I would be looking at is that 0.5 with this level right here. But you don't want this. You see this level right here?
Yeah, you don't want that to break.
You don't want, and that's what happened with Tesla. The rule is in Elliott Wave, wave 3 should not breach wave 1. And where is wave 1? I probably put a line right here. And let's just do this in a different color. Wave 3 should not breach wave 1. Wave 4 should not breach wave 1. And Tesla did exactly that. If you look at the daily on Tesla, right, and this impulsive move to the upside, this was wave 1 right here. Wave 1, 2, 3. Let me show you. This is what we were expecting in Tesla. That did not happen. Sometimes you have to make adjustments. Wave 1, 2, 3, and I was expecting 4 right here, and a 5th wave. That did not happen. It came back down, and I'm like, all right, maybe it's a deeper retracement. But once it began to push below wave 1, it has breached wave 1. The count needs to restart. You need to restart the count because it broke a rule on Elliott Wave. Wave 4 should not breach or enter wave 1 move.
Again from ABC, right?
And now it becomes an ABC, and you have a 1, 2, 3, 4, and 5 wave to the downside. So you have to recount. The market is not static. The market is dynamic. So now you have this here. And assuming it did not breach and it found support right here, I'm just going to remove this. This is a rule, so you got to pay attention to this rule. So now that you found support, let's assume that you found support right within this area down here. And now you're in wave 5. Now, wave 5, a lot of people don't know how to calculate the wave 5 move using Fib retracement tool. Wave 5 is usually the same length as wave 1. It's like if you copy and paste wave 1 and you just put it on top of wave 4, it's going to be the same length. How do you properly calculate wave 5 retracement using the Fibonacci tool is like
you calculate that wave 1.
So you take your Fib retracement tool, you start at the bottom of wave 1, you pull it up to wave 2, you click, you drop it, then you don't do this. A lot of people don't know exactly how to do it. But you pull the tool all the way to the bottom of wave 4 and you drop it right there. Then you scroll down. And where is the one retracement, one extension? It's up here.
Oh, okay, got it.
So now wave 5 is equal length as wave 2.
So now you have it properly.
Now you have it properly drawn. A lot of people don't know how to properly draw wave 5 or these Elliott Wave.
That's a couple $1,000 on some shares.
Yes, and that's $149 a month for me. So hopefully this has been a good educational session.
Thank you so much. Thank you. Now, it's easier to follow you when you go through those waves.
But when I post, guys, when I post the Elliott Wave here, even if I don't post my chart, please pay attention to the Elliott Wave. These are expert analysis you're looking at. So please pay attention to the expert analysis because it'll give you an idea of where price is going. And for you jump into your chart and you look at the levels on your chart because I'm showing you how to draw support and resistance level. Look at the level on your chart and see whether or not what's going on at that specific level where Elliott Wave is forecasting price to go. Like I just did here, the wave was forecasting price to go up here, but I look at the level and I say, okay, there's big selling here, resistance. So I don't expect price to shoot all the way on top. And if it does, it's some kind of liquidity. So, but I want to be out over here because you might have some sort of liquidity thing and then price is going to fall. Yeah? Hopefully that was helpful.
Yeah, very, very helpful. Thank you so much. Appreciate it.
Nope, no problem. No problem. That's how you properly use Elliott Wave with Fibonacci tools, your retracement, and your extensions. Also with levels. You don't use them separately or exclusively. There should be inclusively if you want to have proper forecasting. All right. Any more questions? Optin says I help seeing and hearing it as you walk through. Okay. Great session. Thank you, Optin. I'm glad it's a good session.
Hey, Avi, this is Raj speaking. I had one question, and then it can be tomorrow when we join on the live session.
Mm-hmm.
This is too much. Great session. I'm just trying to think of how does one go about utilizing all this information. Is step number one just looking at your charts and using it and understanding it versus where do you draw levels and how do you baby step? How do you go from kindergarten to grade school to middle school here? And that's I don't need an answer right now, but I just wanted to.
I'll give you an answer.
Yeah.
I can give you an answer. Is the simplest answer I'll give you. You have to have patience with yourself. It's a journey of learning. You do not get from kindergarten day one and get to high school the next day. You have to understand the limit or your capacity for learning. You cannot expect a 4-year-old child, to learn software engineering as a 30-year adult. Or you cannot expect a 5-year-old to learn advanced mathematics and calculus as you would in college. He cannot comprehend it because his brain is not wired to comprehend it yet. Now, what I'm trying to say using that analogy is that you have to think of yourself as a child entering kindergarten, or you're now a college student entering your freshman year. Your brain has the capacity to learn, but the information that you need, all the things you need to learn, will take time, and you have to be patient with yourself. You rush the process, you will miss vital information. I'm not sure if that answers your question, but it takes time, Raj. It took me years to learn the things I do, and when I got into this, Elliott Wave or Wyckoff or anything, it was frustrating because I did it a lot of this I did on my own. And the mistake, one of my mistakes, I look at a lot of YouTube videos, try to understand other traders, how they're trading. Every trader have different strategy that they're using, and they analyze chart very differently. And then you're looking all these information, and you're so confused because you're looking at 10 different people telling you 10 different things, and you have your own personality and your style of trading and your style of doing things. And now what I want to do, I want to recognize what kind of style and strategy that you guys like to use, because your strategy will be tethered to your personality a lot of times. Some of you might be very aggressive with the kind of risk you take within your risk profile that you're taking. Some of you might do things very differently. So I want to recognize your personality, because your personality will be embedded with your charting and your trading. But with that said, there is a right way of learning technical analysis, and the way that I have you guys doing it is understanding the fundamental academic part of technical analysis that as you're learning it, you're in your kindergarten stage, and I'm teaching you guys the fundamentals of understanding how to properly chart using trends and levels, because those are very basic and the most important part of trading. Even to the most advanced stage, you need to understand levels, trends, and patterns that's forming.
These are all the books that we're supposed to read, right?
Not all of them. I'm not gonna do that to you guys.
This
Don't want to
is
kill
just-
anybody in here.
This is no, but this is all the books you put in.
These are all my books.
You read
a lot of
Okay,
them. I haven't read all of them. I've never read the
Oh.
Intro to Algo Trading. I've never read Algo Trading. It's on my list to read. As I have time, I'll read them, but I haven't read them yet. I read a
So,
lot of them here.
with each one of them, all these books creates your own personality, your own trading strategies and stuff like that. So
Correct.
you're taking stuff from each book and then you tailor it based on your personality.
Yes. Well said.
Got it.
So
Got it.
you have the foundation.
So basically,
Mhm.
basically you're becoming a book at the end of all these books.
You're accumulating knowledge from all these books, from
And you're
successful
creating your own
traders.
book.
Yeah, and you have your own personality, and you will find things in this book, Volume Price Analysis, that works with this, and you're pulling the best of each one of these books in your knowledge, and now you're forming a strategy based on your personality. And because you know more, if the market change, you know that the market is changing, and you can switch your strategy very fast because you have a very good foundation of academics of how to switch that and with your experience. So you're not stuck with just one thing or one strategy in every different market cycles you're having. And that's why I want to do it the right way with you guys. Start from the very basic to more intermediate or advanced levels of studies. And as we're doing this, the reason I have live streaming in the morning is that, and you guys will see a lot of times I don't trade and I observe the market with you guys and ask questions like, what's going on here? Should we take a small trade? And then we take a small trade. And just look to see what market is doing. If you're so focused on trading, and you're not looking at what the market is doing, you're going to keep making the same mistakes over and over and over, and you're going to keep blowing your account. You have to pay attention to what the market is doing. And that's why I want you guys to get in a habit. If you don't take a trade, look at the market. You have your levels, you have your TA. What is price doing? What is volume doing? Ask yourself these questions and make notes of it. That's how you learn. So when you take a trade, you've increased your probability of winning, because you observe the market. And it's something you'll see very professional traders say. Sometimes just sit there and just observe the market. Take notes and observe the market.
Because they want to have all that left information.
Yeah.
To base on. So if they don't observe the market, they don't know the left information or how it reacted, Now, one quick question.
Mm-hmm.
We went through this Elliott Waves on Tesla.
Yeah.
Now, how I know you're saying like, whales try to get the price to their targets and stuff like that.
Mm-hmm.
But like how you can foresee one of these events, let's say the way how Tesla has this robotaxi event coming up.
Yeah.
How you can position yourself, where you think you find the information to position yourself during those events, or like what would be something competitive advantage to try to recognize, like how you'll position a robotaxi event on that Elliott Wave chart, like where you think the impact will be.
First of all, the Elliott Wave count is showing upside move. I know that, right?
Mm-hmm.
It's showing me upside, so I'm expecting upside long term. The count has restarted. If I'm a long-term investor, that's all I care about. The big macro picture. I don't care for all these daily moves. That doesn't matter to me. Right?
But I remember you saying that you're looking for something between 145, 175 on Tesla. That's where the most safety thing, right?
Yeah, but that doesn't mean I wouldn't recognize when there's a shift in market sentiment and I want to be married to my bias. I expect 175 to 140 something, where I would want to be a buyer. But if that doesn't happen, I will start buying at the retracement here because I need to know the overall market is bullish. I don't expect Tesla to just be bearish.
220 or what? What's that? Because I don't see it. It's not.
That's around that 230 area.
Yeah, so is that 220 to 230 area where it's keep bouncing?
So we don't take that as an exact number, like literal, like it's going to be 230, because I don't know where the top is going to be. This here is just
I don't know what tariffs will be.
Yeah, so, this here just give you like a guide to go off of, something to go off of. This is just helping you to see like, okay, the top might be somewhere around 325, and we might retrace back down to that 250 area to retest that level. Right, so it gives you a guide to go off of how price may move. Then you look at levels on your chart to see, okay, this is where price might come back down to.
Well, will be a good strategy if you kind of start nibbling in leaps at those levels, Elliott curve levels, and then you get a leap that has an average. I'm just asking. I was thinking about that, like buy some
what
leaps,
would
like
be a good strategy?
No, like will be a good piece of like a type of strategy to, you want to buy like, I don't know, 50 leaps, but then you nibble 10 leaves. Yeah, whatever. I'm just saying a number.
Okay.
But then you start with 10, and then you see it coming down, you buy another 5. You see it going a little bit up, you buy another 10, and then you just make a DCA in strategy in leaps.
Okay, let's give an example. Now, if I think we're in wave 3, right? And I think wave 3 is going to move about, let's use this tool here. I think wave 3 is going to move about, I don't know, 42% or $154, 42%. Let's just say we expect wave 3 to move towards $154 or 42%. We're expecting that to happen. When do you think that's going to happen? I don't know, but let's assume that it may take about 384 days. Let's just say 300 days. So you're expecting that to take a year to happen, right? And you're going to have a lot of sideway moves in this. Now, if you're buying a leap, you're
cooked,
right? You're burning premium throughout this. So you may have a move that's doing this. 1, 2, 3, 4.
Yeah.
You get the idea. Right?
Yeah, I totally got it. Yeah.
Now, instead, if you're buying a leap, you don't want to hold your leap all the way here. What you want to do, remember we talked with the blue and the red? And Elliott Wave?
You want to buy the leap, get out, get back in, buy the leap, get out, get back in, and so on.
So let's just say you're looking at Elliott Wave. We talked about the blue and the red, right? You are buying a leap. If you want to do that, or you're buying something 6 months out. Now, how do you decide what you want to buy? If this move for Tesla takes about, let's just say 6 months, assuming it takes 6 months, right? Let me go back to my chart. And this is how you decide what to buy. Whenever you are buying options, ask yourself, what's the profit target or the target you think that it's going to move to? And let's just say we think this is going to move to 517. The price is currently at, matter of fact, let's don't use that. Let's just assume we're at wave 1. Assuming we're at wave 1 at $327, and you think the price is going to move up. No, let's just do wave 3. I'm sorry. Let's just say we're at wave 2. We finished our retracement. You want to capture that wave 3 movement. You think the price is going to move from from this level here at 364 all the way up to 317. Now, take your retracement tool, start from the bottom, go to the top. What's the midpoint? 440, right? 440 midpoint. Okay. So
you're buying 440s.
Strike is equal to 440. That's your strike. Your strike is halfway of that target. So you're buying 440 strike. You're not buying all the way out there. That's your first thing. Now, if you think this entire move is going to take about 300 days, right? 1 year. You know you can't capture this because you got to buy about, what, 2 years out? Right? But you only can buy a leap. Now, what you're doing, you want to capture at least that 440 move. So you buy a leap to capture the price going to 440. So what you can do, you know every wave count within has another one. So then you can see Elliott Wave may do something like 1, 2, 3, 4, 5. Yeah? So let's just change the color here. I'm going to use that bright color. What you're doing here within this leap, you can take profit at wave 3 here. Or you have, let's just say you bought about, I don't know, 5 leaps. I'm just giving you an example. You bought 5 leaps. You sell 2 of them here. Right? You sell 2 of them here. I'm giving an example. You hold on to the rest.
Back there.
And you could re-enter the bottom here, or you could sell 3 or 4. That's your risk management, or you can sell all of them. That's up to you. You have your own personality of trading.
So what about if you sell 2 or 3 there, then with the profit that you made, you buy again 2 or 3 on that down move?
Yeah, that's up to you. Remember, you're speaking about the market as if you know the market's going to do this. You don't know, because guess what happens? You can think this is a retracement, and what if the market does this? And this does not play out?
So then you
get what I'm saying. You're looking at the market in retrospect as if you know the market's going to do this, but you don't know the market's going to do this. So you're managing your risk because you want to take profit. You want to see what happened. Or you could sell all of it here, your leaps here. You could sell 50% of your leaps on top here. You wait for a retracement, see what's happening, and you could re-enter your leaps if you want to. And you take all your profit at the top here if you want. And you can re-enter. It really depends on you as a trader and your risk profile. That's on you.
The other strategy you can do without selling, also you can sell some poor. What was that strategy? Poor call. When you buy a leap and you sell some other calls, right?
That if you want to do that, you can do that too. But I don't do that. I do not sell calls unless I own the shares.
Got it.
Right?
But a lot of people are saying
that's an unlimited risk you're taking.
That's a strategy that they do to make money. The poor man call.
Yeah. Shiva want me to share this chart? I don't think you'll be able to understand this chart if I just share it, because there's no context to it.
Yeah, you just created this on science fiction.
Yeah, this is just to illustrate a point.
I mean, unless he was here and he was listening to you, then he can go back to it.
You'll have to watch the entire video, or at least this part of it. Guys, it's 8:12. I'm starving. I want to go see my kids. This was a 2-hour session. Hopefully it was a good session. And I still have to analyze chart because I've spent a lot of time looking over doing this. I don't know how much time I have to analyze charts tonight. But what I'm going to do, I may post the Elliott Wave charts for tomorrow and not do deep dive analysis tonight. But overall, I'm just going to run through it really fast. Overall, I'm expecting more upside on SPY towards this level that I talked about here. Look for this level, that 265 to 275 level, within that range, to see if we could have a pullback towards this range right here. So all of this move, that's just garbage. I'm talking about this here, within this range right here. That's 224. So let's look for a bit more upside. Is buy the dip moment tomorrow again.
Which range? 524?
Yeah, don't bother with this range here. We're not bothering with the retracement yet. We're still looking at the upside.
Oh.
We still think we got some upside. We're within. Let me remove anything here. Let me just remove this so you guys are not like getting caught up with this. What's more important is you might see something like this and a pullback on SPY, but it's still buy the dip. But your levels is 265, 275 going into tomorrow or this week, major level. I'm going to post the Elliott Wave, so just use the Elliott Wave. Go to your chart.
You said 265. Oh, okay, got it.
260. Here, go to your chart, and you guys got to learn how to like chart, because you'll never be good at trading unless you're charting yourself. So you have to chart. You have to put in the work. So go to your chart. We're at 550. And I have level all the way up to 575. I think Elliott Wave is suggesting something around here. I think you're going to move up here as VIX is moving down towards this level. And then you might see some upside on VIX if possible. That's for SPY. For QQQ, the level I have for QQQ is somewhere within that 476, 483. We have this level over here. Right, which is level I have here is that 499 or 500. So anywhere within this range, because there's a resistance level right here, anywhere within this range, you can see some sort of resistance for downside. Let's look at Elliott Wave. Oh, I hate when it does this. Okay. Let's look at QQQ really fast. Look at the 4 hours. So we're looking at around $500 level for upside until we get some downside. QQ, as I said, right within this range you're looking at, the 618 level, which is over here. That 618, you tend to see a retracement around that level, which is that 499, 486 to 499. You're looking at that level, 486. Let me just 486 to 500. Put it at. That's the level I'm looking at right here for a rejection to retest, as I talked about in SPY as well. I don't think anybody trades IWM. But same thing pretty much. You have your retracement tool from top to bottom, expecting a move to the upside. You have a supply zone here. We broke below that supply zone. We were in an accumulation range. We broke below, came back, retested, broke below, and came back and retest that demand and move up. So what do you think is going to happen again to that supply zone? Make a guess. You're probably going to see some rejection around that level again.
Yep.
Right, and here we are. We're looking for any sort of pattern that's forming. Then we have our retracement tool that we're using. Then we're heading up to that point. We're in a supply zone. We're heading up to that 0.5. So I expect somewhere around this level here to get tapped. And then maybe a breakdown to this level here.
So this retracement tool, it moves automatically with the graph, or you make it every
it moves with the graph. You just got to put the tool from where your levels are, and it's going to move with the graph. So expect somewhere around.
In this case, the tool that where you anchor it.
Have you ever used a Fibonacci tool before?
Yeah.
Okay.
Like,
so
where was your anchor points in
my
this case?
anchor point for this is that when you have a breakdown, you start from the top all the way to the bottom, and that's your level that you're looking at. That's your anchor, top and bottom. You start from the top to the bottom, and then you want to see how price is moving up. So you have a supply level within this range here of 204 to 298. So it's very much possible you see price move up towards this and then break down again, or somewhere within this 205 to 216, somewhere within this range. I don't know where it's going to be, but somewhere within this range. Let's see what Elliott Wave says. Elliott Wave thinks it's somewhere within this 200 to 205 level. 200 to 205 level. Yeah, it's the same thing. 200 to that 205, 207 level. So somewhere within this range here. We're expecting a breakdown to happen, a retracement. So I'm giving you guys how you could start strategizing to take positions this week. So you're looking at levels. That's it for the entire indexes for the market. I don't know, because of the time now and we've had this session, I don't know if I'll have time to even do like a deep dive analysis tonight. But Tesla, I am still looking at Tesla to the upside. But where you see some resistance on Tesla tomorrow is at 290, 291. So be careful with that level. You want to see a break and hold on that level. If you get a break and hold of that level, you're going to see upside towards that 300, towards 320 to 325 area.
You'll hear me screaming.
Yeah, please don't go and just short it.
No, I'm not anymore.
So then you have, I talked about this here on the 4 hours TSLL that I even posted, and I said to you guys, the first level, if you guys were looking at the Discord, I posted all of the charts. I said 2-time leverage ETF. I told you what that was, and I said it's accompanied by what? 3 bullish divergences: MACD, RSI, and velocity. And I told you guys expect some upside. And the first one would be somewhere around this level, 1135 to 1211, where I think you're going to see some resistance to retest the downside. And I showed you the divergence on the velocity, the RSI, and the MACD. What velocity is really telling you here is that though it is being selling off, the selling pressure is being eased up. So the selling pressure is not as much, though the price is dropping. So there's 3 confirmation here, confluences of bullish divergence. So and then you have a pattern that's a falling wedge, all bullish things lining up. And what I said, I had this level, and I said the first target I'm looking at is that $10 target, and then the $11.35 to $12 target on TSLL. Now, if we go back to TSLL, we hit the first target. I expect us to hit the second target as well, as Tesla is moving up. For NVIDIA is in this pattern right here. I expected originally for NVIDIA to drop to the bottom here. Once we get there, I don't know if that's going to happen. If not, what we'll see happen is that this could start wave 1, and we can see wave 2 retracement up here, and then we move up. But I expect some sort of reaction around that Will's target of 115. And then the next target that you have is that 230 area. Let's just see what Elliott Wave has. I'm going off levels. So these are the levels right here. So that 123 area. So somewhere within that 115 to 123, if it breaks out here, is where I will see some sort of retracement happening. Let's see for NVIDIA. 124, okay, 123, 124. So expecting NVIDIA to move up towards that level. So as I was looking at the Elliott Wave, as I just said to you guys, Again, 124. I just looked at the level. I didn't even know Elliott Wave forecast was happening. I'm just looking at the level. This is experience. Over time, you'll be able to gauge these things very fast. Let me see something here. And back down to 100. We look at the weekly. So the top is in, back down to 100. And on my chart, I have, remove this. And here is a retest level. So I'm expecting, see this level I have, I have this drawn out here already. This level here, I have that drawn out right at that 100 level. There's a reason I have it drawn out on my chart, because I'm expecting this level to be tapped again. And the reason why, because there's just a lot of volume within liquidity within this region, because you saw this big push right here. So I'm expecting another downside to retest within this gap over here, this level, to come back down. So for NVIDIA,
gap, the $100 gap on NVIDIA, you mean?
Yeah, somewhere within this area. So NVIDIA, I expect more upside in NVIDIA, but I want you to pay attention to that 110 and 112. If we break that 112 up to the upside here, if you see any sort, let me just delete this. If you see something like this happen, guys, do not go shorting the market, please. Our bias right now is still bullish. We could see a break. We can even see a retracement here, but continue. And then you can see that push to the downside within this area. So you could still see something like this for NVIDIA play out. The most important level here for NVIDIA I have is that 112 level. We broke that level and just sold off. So I have that level in NVIDIA, 140. That will be the target where you'll see more selling, but that will be the major target. And this will be like a wave 1, wave 2, and a wave 3 get hit here, and wave 4 and 5. Yeah. So this will be what I'm going to be looking at tomorrow for Amazon. Everything is buy the dip tomorrow, guys. So look at key levels. Amazon is at a key level, resistance level at that whale's target, which I forget the whale's target. I don't really care for whale's target. Forget it. Just remove the whale's target. Matter of fact, actually, let me just leave it because I might just adjust it later. But the level I'll be watching for Amazon is that $200 level, but I want to see how price react at that 192 to 189 to 192. I got that backward. I need to flip that around. Okay, that makes more sense. From that 182 to 192, I want to see what price do there. If anything, you can have price just rip right through, start a morning open, and you have a retest, and you continue to move up towards that 200, then you probably have some selling to come back down. So maybe a $200 target I have on Amazon right now, looking at this key level over here, where whales have their target. This is a resistance level where you have that massive sell-off. So I expect to see some selling there happen again. Let's see what Elliott Wave says for Amazon. Let's look at the 4-hour. So you have a $200 level here, then some selling back down to 150. $180. So if that's the case, you use your retracement tool. So yeah, so they have the same level as I do, a 200. And then you have a retracement somewhere around, you might have that retracement somewhere around here. Maybe that's 618 at 178. And somewhere within this range here that I told you guys. We'll see when we get there. We're not so focused on forecasting the downside yet. We want to make sure we get the upside first. So that's what we're looking for in Amazon. So you guys go back and look at this video. So we're still seeing more upside. For, I did NVIDIA already. Did I do Tesla? I did Tesla already, somewhere around this range. For Tesla, I'm looking at, got to see that 290, 291 break for more upside to that 300 and 325. AMD, if you're looking at an AMD, let's look at the 4-hour in AMD. Remove this. With this, the overall market is bullish. Expect more bullish movements For AMD, I have a resistance level at 103 and a pivot level at 106. I expect price for AMD to continue with the market somewhere around this area. So for AMD, I think the price is going to move within this range here. 103 to 106 has been a major key level for AMD. So right within this range here, and then back down to probably that, let me see, if you're using a retracement tool, assuming that's the top, and you use your retracement tool, I expect price to come back somewhere around that $80-something area, somewhere around here. I expect price to fall back to. And you guys watch to see how many of these things will hit targets that I have here, and I bet you nobody will trade them. They'll just watch them happen. So yeah, that's what AMD. Let's see what Elliott Wave says.
Tesla.
Huh?
I will Tesla.
Let's see what Elliott Wave says for AMD. I don't want to personally go do Elliott Wave on myself. I might as well just hire some expert analysis, and then I just go and do it myself, and then I just look at both of them, make sure that we're both right. So there's no subjective. So 106, that's around 106, because we're not at 110 yet. It's around 106 for AMD before a downside towards that. What is that? 70? That's a lot of downside. Let me see the daily. So still in a corrective manner to that 70, still in a corrective manner. But for AMD,
right there, it's liquidation mode.
Yeah, same thing here. So at least I see upside. So once we get there, guys, there's big opportunities to short AMD to the downside. I'm telling you, a lot of people will not take the trade. I'm looking to take the trade. If we're in a direction for the market that's not moving a lot, if these tariff stuff is like coming together and deals are being made, we're in a good position. So we're trading in a directional market. So big movement to the downside here in AMD. Still some upside yet, but I don't really want to trade this upside.
Still think that with the tariffs and everything being made, you think AMD will still want to go down there and retrace to that 70?
That's why we have levels. Better? So that's why I have levels, because I have level here at 89. So I'm not gonna hold my, if I'm doing puts, I'm not gonna hold my puts all the way down to 70, man. I'm gonna be taking profit here. I have my level because remember, in wave, the market doesn't move in one straight wave; it moves in multiple waves. So you're taking profits at key levels, right? So that's what I expect. So after that, at least I expect some downside on AMD to at least this level here, at least this level, and see whether or not we get a bounce to the upside or we continue to the downside. Now Google, let's look at Google. Google got rejected here. Looking at this chart in Google, Google looked crazy in the 4 hours. Google looked like it just wants to just drop completely. Okay.
And they had good earnings.
I don't like this at all at Google. So I'll be very cautious with Google, guys. Very cautious with Google because you have a lot of volume. With this here, you could call it like a dark cloud. A candle with high volume. That is bearish on Google. Looking at the 2 hours on Google as well. You have some volume coming in here. You probably have a retest somewhere around this 161 area. So what level am I looking at for Google? If we get a bounce, is this level right here. I want to see what happened in this level for Google, right? And the other level I have is that pivot level all the way back. Is all the way back. I want to see what happens. So you have a lot of volume here as well. So Google could even do something like this. So I'll be very cautious with Google. Google could come down towards this level and then start moving back up again and then fall, or it could go up towards that 173 level and then come down. I don't know exactly which is going to be. Google is more complicated, but based on the volume I see on the daily, I don't like it. But when I'm going into more the micro side of it, I'm seeing a little bit of buyers stepping in. So we can see more upside on Google, a retest of this level here, anywhere within that whale's target, or you can even come lower to retest all the way at the bottom here. But the more bullish case scenario would be to stop somewhere here and just move back up towards this level, and then move back. Let's see what Elliott Wave have for Google. Let's see. I wonder if my daughter is crying. I hear my daughter crying. Okay, so we have a move down to that, where's that 160, then a push back up towards that 175 on Google. Guys, you see that? I'm not even using Elliott Wave. I'm literally just looking at the chart in like 2 minutes. I'm telling you what it looks like to me. That's experience over time. And then I want to see Elliott Wave doing the same thing. So Elliott Wave forecasting the same thing, supply and demand and levels are telling me that may happen. So something like this I might see happen with Google. And then you had that UTAD on top here. And then you see that breakdown at the bottom, where you're going to have like a drop here and then move it back. And then you break down to the bottom. And where is Elliott Wave showing? Break towards that 155. 155 is one of the most important level. I had it up in my previous analysis going back like a month now on Google, matter of fact. Yeah, straight here. You want to retest that level. And if you're using your Fib retracement tool again, it'll be from the bottom here to the top. And then you have the 0.618 right here. So I want to see that level being retested as well. You retested. So this would be a case of Google. But as I said, pay attention to what happens within this level, because you can see Google come back down towards that 160 level, which is somewhere here. Move this down over here. You can see Google come back down to this level to test this trend over here. This falling, this rising wedge. Let's look at, I went over a lot of it already. I don't think anybody's trading anything else. That's it, right, guys? Let's look at, Apple. Let's look at Apple really fast.
Apple and maybe if you quick at Broadcom, Apple.
Let's look at Apple. Guys, I don't think I'm going to do a technical analysis deep dive tonight. I've did a lot of analysis here on these charts. Everything a little bullish. We're still seeing more upside, and then we're waiting for that retracement to happen to get to that level where we're coming back down. Apple is moving up. We have a supply zone on top here. A major key level I have for Apple is, let's just we have a gap here. We have a daily gap on Apple from 207 to 221. 207 to, I'm going to give you the exact. $221. So Apple is currently within that daily gap. You have a supply zone at 209 to 212. You can see Apple do, let's see. Don't need it. This was a breakout that I talked about. We retest the supply zone, the support zone. I talked to you guys about this as well. So you could take a risk right here and get upside. So Apple's in a supply zone. What you want to see in Apple, if there's a retest, you want to see a retest that hold this level here, the biggest dark pool of 199. If there's a retest, you want to see that level being held. But be careful with the supply zone. You want to see Apple above this 215 level. If Apple cannot get above the 215 level, I don't expect Apple to come back more on top here. But be very careful because obviously there's a lot of selling happening at the top here in Apple. So this here would be 225 would be a very big level to watch. And then you have a double top right on top here, which was a supply zone. And I have the supply zone coming all the way from the back here. So be careful with this level here. Be careful trading Apple. You want to see a lot of levels hold on the upside, a lot of resistance on the upside here in Apple, guys. So you can see a lot of liquidity here. So you can see Apple even move towards do something like this. You see Apple come back down a little bit here and start tapping into liquidity on top here all the way to 225, and then have that drop to the bottom. You can see that happen. A lot of resistance here. We have that daily gap, so you might see Apple fill that daily gap around that 221 area, and probably just do like a little U-tat and then do that big rejection. So a lot of rejection resistance within this area as you're trading within that daily gap. So it's currently attempting to fill that daily gap. Let's look at Apple really fast on the 4 hour. 220 on Apple, and then back down towards that 190. As I said, right here, daily gap is being filled. Elliott Wave is showing that 220. You might get a 220 and that drop to the bottom, or you might get like a little U-tat and then that drop to the bottom. Somewhere within this range is where I'll be very cautious with Apple. Anywhere within this range here, guys, I am cautious with Apple. All right, from 215 all the way up to 220, gap is being filled at 220. So 215 to 225, $10 range. The middle here, midpoint is 220. I'll be very careful. So I have supply zone here as well. So you want to see Apple hold this level up here, which is 210. You want to see Apple hold 210 if you're trading it. You don't want to see Apple start rejecting down to the bottom. Okay, that's it for Apple. Somebody had one more chart because I'm not going to do deep dive tonight, guys. I've done a lot of analysis tonight.
If you don't mind, AVGO, AVGO.
AVGO.
Yeah, Broadcom.
Are you looking to trade that tomorrow?
Yeah, I mean, I missed it on Friday, and I think I was.
Okay, give me 1 second, guys.
Big strength.
1 sec. All right. So this is it pretty much. I was supposed to do one more. What's the ticker?
AVGO.
AVGO. Broadcom. Okay. So we had a gap here. We filled that gap right over here. We came down, filled that gap, came back, reject. And we kind of had like a little bottom here. That was your demand range. Came back, test that range. Now you're heading back into filling in that gap range right there. So the level that I would be cautious of is that level right there, 219. I'll be cautious with 219. And 211 right there. And let me see here. Where you actually broke down right here. So I will be cautious within these levels right here. And we're heading back because this is where you actually break down. So you want to make sure that you're above that $200 level, but then you have that 211 level there again. So you're still trading within a range where there's some selling happening. So I would be cautious within this level, because now in terms of the pocket, you want to get above this level here, and then you can see upside, because if not, you're going to see some downside, because you have a gap here where you could move up towards the next level, but you got to get above this level. That $200 level is like one of those no trade zone level, because you don't know what it's going to do when it's within that no trade zone, that supply level right here. You don't want to trade it. Does that make sense to you? I'm not sure.
Yeah, you got it.
At certain levels,
yeah,
that's a no trade zone. You
100%.
don't get in. You don't trade it. You wait and see what price does.
Yeah, because you don't have any edge in that area.
Yeah. All right, guys.
Yeah,
that's
makes sense.
everything.
Thank you so much.
That's everything for today. Hopefully this session was helpful. Tomorrow, for tonight, I will not do deep dive analysis. It's late. By the time I'm done, it's going to be insane. I'm going to see if I can take some pictures, some screenshots of my analysis, just post it in, but I can't do a deep write-up. If not, I'll be done like till 3 in the morning. Hopefully this here was more helpful than just the screenshots. All right. So thank you guys for being on the chat with me. Appreciate it. All right. Have a good night, and I'm going to see the post the Elliott Wave analysis later on, at least. Okay. Y'all take care. Okay, bye.